but people eventually lose, faith in the thing that they were maybe previously had faith in, because when things seem reasonably stable, you're more likely to believe things that are not true, that are kind of shown to you.
Yeah.
Whereas when things around you are just not working well, you're more likely to question things. That kind of self-referential microphone just gets weaker and weaker over time. And right now, gold is kind of reasserting itself in the global central bank system. They're saying, look, I don't fully trust the dollar. Some of these countries are stacking gold. I think some of the smarter ones, usually smaller ones, some of the smarter ones are also stacking Bitcoin.
According to Lyn Alden, Bitcoin represents the most credible path we have to exit the era of fiat centralization. It's not guaranteed, she warns, but it's our strongest chance. The journey, however, is anything but easy. Bitcoin is going up against a global financial system with hundreds of trillions of dollars in embedded network effects, the dollar-based economy, government bonds, fiat currencies, and deeply rooted power structures, and yet this small, open-source protocol created by pseudonymous developers is steadily navigating a minefield of geopolitical and economic resistance. Despite its size, Bitcoin is making undeniable progress.
And before that, be the one who says, I was here before 100K. I'm on a mission to hit 100,000 subs before 2025 ends. Help me get there. Subscribe now and drop your thoughts on the market in the comments. Let's grow and win together.
So I think it's by far the best shot we have. I always hesitate to say that it's like inevitable, but basically it's the most credible way we have to get past this period of centralization. So for about 150 years, we've been in the period where, going back to my prior point, transaction speeds were speed of light, physical settlement was still slow. We finally invented fast settlement. Satoshi and all his predecessors finally figured out fast settlements.
Yes.
And then, we're kind of watching that catch on. It has to go through the massive network effect. It's up against the $100 trillion network effect of the dollar, the multi-$100 trillion network effect of fiat currencies globally, the whole global bond market, and all the governments tied to it. So this little open source thing is kind of doing this multi-decade path through this very entrenched system. It's gradually succeeding. It has things to navigate. It had to, navigate big countries trying to ban it and then figuring out they kind of can't ban it. And, politicians realizing that there's nothing to gain really from donors or anyone else, from voters, for being anti-Bitcoin. But there is a lot to gain from being pro-Bitcoin. And so it's kind of going through that game theory over time. There's a couple countries that are ahead of the curve and say, well, if other countries are going to be slow and even anti, we're going to be the ones that embrace it. It still has to go through some challenges. Like, if we do have, quantum computers, it's got to be able to make that change. And that has implications for signature types and potentially even block size issues with the length of those new signature types. So it has to navigate still, I think, some challenges ahead. But it's by far the best chance we have. And it's something that it's kind of fundamental. Like even if society were to rerun this whole modernization period multiple times, kind of like how the bicycle would always come before the car, would always come before the airplane, because basically you kind of have the predecessor stuff kind of built into it.
Yeah.
We always would have Morse code before we have something like Bitcoin.
Sure.
And, Morse code could be called different. It could have a different, alphabet equivalent,
Yeah.
but it still is basically Morse code.
Right.
Kind of like how Bitcoin wouldn't necessarily have the exact parameters it has now, but something like Bitcoin, if you get to this period, would eventually emerge. And I think we want it to succeed on the first try rather than have to kind of start this project all over again. So it is a really big self-reinforcing network effect, which is why I think it still lasts quite a bit longer than maybe we'd hope for. But at the end of the day, it's still funded by bond markets. Propaganda starts to kind of diminish when the bond market is obviously failing.
This is happening now.
Yeah, and different parts of the world at different speeds. But people eventually lose, faith in the thing that they were maybe previously had faith in, because when things seem reasonably stable, you're more likely to believe things that are not true, that are kind of shown to you.
Yeah.
Whereas when things around you are just not working well, you're more likely to question things.
Yeah.
I mean, that happened, the whole Cold War. If people got a taste of, if they were in one of the less free parts of the world and they got a taste of what the outside world looks like, it's well, wait a second, I don't seem like I'm on the winning side right now.
For sure.
Whereas if you didn't even know that outside world existed, how would you even know?
Nothing to compare it against.
Yeah, and so I think that as this plays out, that kind of self-referential microphone just gets weaker and weaker over time. And right now, gold is kind of reasserting itself in the global central bank system. They're saying, look, I don't fully trust the dollar. Some of these countries are stacking gold. I think some of the smarter ones, usually smaller ones, some of the smarter ones are also stacking Bitcoin. So around the margins, they can talk all they want about how the treasury market's safe, but they're increasingly, institutional investors that are like, this fiscal train's not going to stop anytime soon. And there are central bankers saying this is not going to stop anytime soon. So that trust can still erode over time, and it just takes a while. It starts with the assumption that Bitcoin gets massive and really starts to actually meaningfully displace currency and bond markets. That's basically the question. If you look at some of those older European maps, they'd be a lot more fractured than what it kind of consolidated into. And I think to some extent that kind of can reemerge in the sense that while governments will, in most cases, in most regions, still exist in various capacities, they have less of just a full control over everything. Like, for example, the full banking system is currently under every country's control. They can go around that. And they have a much harder prospect of raising capital. Because again, if Egyptians, going back to that point, 20 to 30% money supply growth is happening. And there's very few ways to opt out of it other than power users getting into Bitcoin. And even people that have gold stashed away, they still have bank accounts. There's always still some like residual stuff being just kind of opaquely taken from them by this seigniorage, this debasement. And so it really just kind of closes the window of all these different issuers around the world for how much seigniorage they can get away with. Because they're competing with before they were competing basically with gold. Or smaller countries are competing with the dollar. And so they're competing with something, if it's gold case, they're competing with something that grows at 2% a year and is really slow. If they're competing with the dollar, they're competing with something that grows at 7% a year but is pretty fast and usually gives you a yield that gives you some of that 7% back. Whereas now they're competing with Bitcoin that has zero long-term supply growth and is basically as fast as the dollar. And that's a much harder competition to go against. So I think it to the extent that Bitcoin gets another 10x or notably bigger from here and really kind of eats into fiat currency markets more, it really reduces the ability of all these different entities around the world to capture that scale of seigniorage.
Lyn Alden argues that gold isn't obsolete, it still serves a critical role as a backstop, much like it did for equities and paper currencies in the pre-digital era. In extreme scenarios, such as power grid failures or systemic collapse, gold remains a valuable hedge. But it has limitations. Gold isn't trustless, and it lacks programmability. Even gold-backed crypto inherits the same weakness, the oracle problem. You still have to trust someone to actually hold the gold. Bitcoin eliminates that need for trust, and that's the breakthrough.
And I think that the more conservative thing I would say is that it makes it more transparent in the sense that there might still be communities that want more government or want less government, but at least they generally know what they're getting into. It's like they're saying, like, part of why we run, my talk here was called Nothing Stops This Train. I was talking about the fiscal deficits. It's because we can't agree on how we're going to balance things. So this error just keeps spilling out as we fail to agree with each other. And in a Bitcoinized world, that can't really happen. There, like, defaults happen before that just runs forever. And so basically it says, well, we can still pay for this, but we actually have to tax for it. And so, and taxes are transparent. That's why if you go back to wars in the past, that's why even like older emperors and kings would debase their coinage, because it was a way to kind of go around the transparent tax system. People revolt over taxes more than they, keep track of the exact metallic content of their coins. So it kind of just reduces the attack surface of how much can I opaquely steal from you? And so then, different places are free to still kind of choose how they want to govern themselves, and there still might be pockets of authoritarianism, unfortunately, but at least that opaque part is a much less viable option. And it's not to say that gold is now useless, but much like how gold was kind of treated as the backstop for the equities and financial markets, I think in a digital world, gold's kind of the backstop. If people have, what about tail risks of everything going offline or something? People do like the physical aspect of having, say, gold in their house or whatever. So it's not to say that it's useless, but it doesn't serve that same purpose of really trust minimize money. And even Bitcoin gives us totally new things you can do with it. Like you can do multi-sig custody and split your keys on multiple jurisdictions, so that even technically a nation state has trouble getting to it in any sort of direct sense. Whereas with gold, and this is really any real world assets. Even if you put something like a blockchain on top of it, it's still tied to where's the actual custodian held, what is the legal chain that works there.
The Oracle problem, right?
Yeah, and you know, like for example, and people often say, well, why can't you make like a gold-backed crypto? And it's like, well, they've existed for years. There are gold stable coins. There's a market demand for them. It's not very big, but it exists. And I can imagine, for example, if you want to, you know, have access to gold, but you're in an environment where it's hard to get physical gold, you can't get the gold ETF, you can at least get this, you know, semi-trusted chain of custody to hold that gap for you. But it's open to the same problem that they ran into time and time again. Mainly, it's the best commodity for it. So basically, as all the different technological groups come together, the ones with better technology can make more of the other one's money. They can't make more of the technologically superior culture's money. And basically, when you kind of iterate through that, when all the different cultures of the world kind of came together and kind of evened out, gold and to some extent silver basically beat all the others. They have the highest natural stock to flow ratio. They have like the longest durability. The kind of the, you know, the most dense you can kind of get for the most part. And if you go into even rarer things than gold, then you run into liquidity issues. Like, you know, people could technically use meteorites for money, but they're not fungible. They don't have a lot of the traits, even though they're super rare. So it's basically, it's kind of getting as scarce as you can get before you actually start having issues related to the other metrics of money. And that's why gold is that sweet spot. And the only limitation of gold is, one, it was slow. And two, it wasn't as divisible as people would like it to be. It's hard to, you know, make a small enough gold coin that you can make it like an hour of someone's work, or you know, and so that's where silver was common as well. So you'd have that kind of bimetallic standard combined with some of these other informal ledgers. You know, if you need to break things up, you can say, well, you know, you do this for a little bit and you'll owe me one piece of silver, for example.
Lyn Alden concludes by framing Bitcoin's rise as part of a long arc of monetary evolution, a technological convergence. Historically, the most advanced forms of money outcompeted their rivals. Gold and silver dominated because they were durable, portable, and resistant to counterfeiting. Today, Bitcoin is winning for similar reasons, but with a digital edge. It's scarce, divisible, programmable, and trust minimized. Gold's greatest weakness was its lack of divisibility and speed. You couldn't easily use it to pay for an hour's work or send it overseas in seconds. Bitcoin solves that, and it's why it's becoming the money of the digital age. *Bitcoin versus gold? Click here to dive deeper.